In this video, I would like to provide you the guidelines and recommendations for the applied project, which will be your final assignment for the Theory of Finance course. The main goal of this project is to create an investment portfolio that satisfies your preferences and estimate its risk and expected return. We recommend that you present the outcomes of your project as an analytical paper, which is up to 5 pages, containing all the workings and conclusions. Here are the 7 stages of the project that you are going to complete. First, you need to identify your profile as an investor. Then, according to the chosen profile, you need to choose the structure of your project and select the securities for your portfolio. Having selected the securities, you need to look for the historical pricing data and then estimate the historical performance of your portfolio and identify the portfolio better based on the capital asset pricing model. After that, you will need to test the performance of your portfolio in order to see how well the return follows the predictions of the CAPM, and then provide a conclusion and recommendations. Now let me describe each stage of the project in more detail. First, you need to determine your profile as an investor. You need to decide whether you are conservative or moderate or maybe an aggressive investor, because this determines the choice of the type of securities you're going to include in your portfolio. For example, as a conservative investor, you're likely to focus on fixed income securities mostly, with only little exception for the blue chips. However, as a moderate investor, you're likely to include corporate bonds, which are more risky than government bonds, and also pay attention to blue chips and also reserve some space in your portfolio for more risky securities as growth stocks. As an aggressive investor, you are not likely to include fixed income securities in your portfolio at all. Instead, you will mostly focus on securities with high risk, such as blue chips and growth stocks. There are some additional conditions which we introduce for simplicity and not to overcomplicate your workings. First, your portfolio will be passively managed. In other words, you will not be able to change the structure of your portfolio once you create it. Also, there are no short positions and no marginal trading allowed. Having chosen the investor's profile, you will need to look for the securities for your portfolio. As for the stocks, we recommend you to include the stocks of publicly traded companies, which are included into the broad market index of the national exchange. As for the bonds, you may experience some problems when looking for specific issues. However, in this case, we would recommend you to look for the bond ETFs, which are available at the national exchanges and the OTC markets, and generally their quotes are publicly available. We recommend you to include up to 10 securities into your portfolio in order not to overcomplicate it. The securities should also belong to the same market or country in order to escape the currency risk. There is another thing which I would also recommend you to do. Please provide some brief comments for each security why you decided to include it into your portfolio. This will be helpful for you in order to make conclusions at the end of this project. Having chosen the specific securities or exchange-traded funds, on the next step, you will need to look for the historical pricing data for these instruments. We recommend you to use publicly available online sources such as Yahoo Finance or other similar resources in order to look for stock quotations. Please also keep in mind that in order to use the CAPM properly, you also need to look for the historical values for the broad market index like S&P 500 or some other national stock exchange indices, and the yields on government bonds on the specific market of your choice. You need to download the pricing data for these instruments and indices for the last 3 years. At the next step, you will need to estimate the historical performance of the portfolio you composed. You need to use the estimation period of 2 years ending 1 year before the current date. And we recommend you to use the capital asset pricing model as the primary model for your estimations. So you will need to estimate the expected return on your portfolio, then choose the proper stock index as a proxy for the market return and estimate its expected return for the same period. Finally, you also need to work out the return on government bonds as a proxy for the risk-free rate in order to calculate the portfolio beta based on weekly or monthly frequency. Having identified the historical beta, you will need to apply this figure for the estimation period of 1 year until the current date. You will need to estimate the expected return of your portfolio based on historical data in order to see how well the model predicts the returns of your portfolio, tracing the returns of the stock market index. And finally, you will need to calculate the actual return of your portfolio. Now it's time to move to conclusions and recommendations. The first question you need to answer is whether CAPM worked well in estimating the expected return of your portfolio. If not, you need to look for a reason for that. Also, you need to understand whether your portfolio outperformed or overperformed the market, and whether it was anticipatable. Another thing which I would like to note is that CAPM is the market-based model which only takes into account the market risk, also known as systemic risk. For this reason, you also need to make sure that your portfolio was diversified enough. And finally, last but foremost, you will need to make a conclusion what could be done in order to improve the performance of your portfolio. That will be a perfect ending for your analytical note and a good result of the project as a whole. I believe that you find this project interesting and useful for your study at the program. Good luck!